Assalamualaikum. My name is Mardia Hamiza binti Hazlan and my metric number is 07DAT22F1014. Today, I will be presenting about Task 1 audit report, which can be referred from page 139 to 144. First, the address is to the member of GDX Berhad, and for audit scope, which stated that the financial statement of GDX Berhad, which comprised the statement of financial positions of the groups and of the company, statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of cash flow of the group and of the company for the year ended 31st December 2023 have been audited. Next is audit scope, where auditor also identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error, and obtain an understanding of internal control relevant to the audit. Additionally, evaluate the appropriateness of accounting policy use and the reasonableness of accounting estimate and related disclosure made by the director. Next is for the opinion paragraph. The auditor issues standard unqualified opinion as the financial statement give a true and fair view of the financial positions of the group and of the company as of 31st December 2023. There are two key audit matters stated in the auditor's report, which are revenue from express delivery service, mainly derived from express delivery service rendered with the characteristic of large volume of transactions involving immaterial value individually, and also goodwill arising from consolidations, approximately Rm 29 million ringgit. The audit was performed on 16 April 2024 by the is generalize the extracted auditor's report. From Gdexpress financial statement as of 31st December 2023, we can conclude that the report is standard unqualified report because the accompanying financial statement present a true and fair view of the company performance and financial situations. The company accounting policies and practice were deemed to be free from any significant issues, and the auditors failed to discover any material misstatement. The financial statement also comply with Company Act 2016 and Malaysian's financial reporting standard. The report also consists of two key audit matters, such as revenue from express delivery service and goodwill arising from consolidations. Overall, the company operational performance and the financial health are appropriately reflected in the financial statement.
Assalamualaikum. My name is Ifina Zazmin binti Abdul Rahman and my matrix number is 07.22F1010. Today I will discuss why certain disclosures such as three key areas like subsequent event, contingent liability and commitment are necessary for financial information users. These users can be analysts, investors and other stakeholders. First, user must be aware of subsequent events as they may have a significant impact on future financial results, such as changes in financial performance. By disclosing these events, users can make accurate decisions based on the latest and relevant data. As shown on page 260, this company disclosed a loan facility agreement granted to its subsidiary after the reporting period. Next, disclosing contingent liabilities help user better understand the company's potential financial risk. User can use this data to evaluate the possibility that the business will have to settle large debts, which could have an effect on cash flow and financial performance in the future. As noted on page 133, that states no contingent liability has become enforceable within 12 months after the financial year of the company. Last but not least, the disclosure of a commitment provides information on future cash flow needs and financial stability. Investors can determine the company's long-term financial status, capital allocation policies, and liquidity requirements to make sure they have a clear understanding of the obligations on future goals of the organization. Refer page 229, where the company discloses its subscription agreement for renewable preferentials. In summary, these disclosures play a crucial role in providing transparency and helping users of financial information make a good decision. It also helps companies enhance their financial reporting integrity and support governance practice.
Assalamualaikum. My name is Khairullah. My matrix number is 07DT22F1028. I will present about task 3. Question 1. Identify one account balance. Based on the 2023 annual report of Gdex company, the statement of financial position shows several items of account balance. An example is inventory, which is a current asset. The indicated amount of the group is RM 2,832,783 for year assessment 2022 and RM 2,905,998 for year assessment 2023.
My name is Dayang Nur Hayati binti Abdul Ruslan. My matric number is 07.22F1038. So the next is classes of transaction. Based on the 2023 annual report of Gdex company, the statement of profit or loss and other comprehensive income shows several classes of transaction. An example is revenue. The indicated amount of the company is RM 4,212,000 for year assessment 2022 and RM 4,226,400 for year assessment 2023. This is audit acceptance for each of the selected account balances and classes of transaction. Audit test procedures to perform an audit on account balances for inventory. So number 1 is inspection or physical examination. To perform a thorough physical inventory count and verify that the recorded quantities accurately match the actual physical count to ensure accuracy. Number 2 is observation. To ensure the client's inventory counting process is conducted accurately and in accordance with established procedures, thereby verifying the accuracy of the inventory records and the reliability of the counting process. Number 3 is inquiry. The task involves interviewing inventory management staff to comprehend the processes and control for inventory recording, as well as asking specific questions to ensure accuracy. Number 4 is confirmation. Confirm inventory quantities with third parties like supplier or warehouse to ensure accuracy and completeness of recorded inventory. Number 5 is recalculation. Use cost formula like FIFO, LIFO, and weighted average to recalculate inventory quantities and value, and verify their mathematical accuracy. Number 6 is analytical procedures. Analyze inventory level using trend and ratio analysis to detect unusual fluctuations and compare them to previous period and industry benchmark for accuracy. And the last one is test of control. Number 1 is observation. Observe the implementation of internal controls over inventory, recording, and management. The next is inquiry. Inquiry about the procedures and control in place for recording inventory quantities and how they are monitored. Number 3 is workshop test. Trace a sample of inventory transactions from initiation to recording in the inventory system to ensure proper documentation and authorization. And number 4 is deep test. Examine detailed inventory transaction for any unusual items or discrepancies that could affect accuracy. And the last one is weakness test. Identify any weakness or deficiencies in the internal control over inventory that could lead to inaccuracy in the recorded quantities.
Next, there is 7 audit test procedure. For classes of transaction, which is revenue. First procedure is inspection or physical examination. Examine sales invoice, contracts, and shipping documents to verify that record sales transactions have corresponding outbound goods or service delivered. This ensures that the revenue record actually occurred. Second procedure is observation. Observe the process of order taking, fulfillment, and revenue recording to confirm that sales transactions are being recorded only when goods or services are delivered to customers. Third procedure is inquiry or interview. Interview sales and accounting personnel to understand the procedure for recording sales transactions. Ask the sales and accounting personnel a specific question to ensure that only actual sales are recorded and that there are no fictitious transactions. Fourth procedure is confirmation by third parties. Send confirmation to customer to verify that the sales transaction recorded in the books actually occurred. This involves asking customer to confirm the details of their purchase and the amount billed. Fifth procedure is computation or recalculation. Recalculate selected revenue transaction to ensure that the amounts recorded are accurate and correspond to the actual sales made. This helps verify that the record revenue is based on actual transaction. Sixth procedure is inquiry or interview. Perform trend analysis and ratio analysis to identify any unusual fluctuation or patterns in revenue. Compare current period to prior periods industry benchmark to assess the reasonableness and occurrence of record revenue. Last procedure is test of control. There are 5 tests of control. First is observation. Observe the implementation of internal controls over revenue recognition to ensure they are being followed correctly. Second, inquiry. Inquire about the procedure and control in place for revenue recognition and how they are monitored. Third, walkthrough test. Trace a sample of inventory transaction from initiation to recording in the financial statements to ensure proper documentation and authorization. Fourth, depth test. Examine detailed revenue transaction for any unusual items or discrepancies that could indicate fictitious sales. Last, weakness test. Identify any weakness or deficiencies in the internal controls of revenue that could allow for the recording of non-occurrent based revenue.